Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is William Mitchell. I'm just going to call him Bill. And Bill is also a certified public accountant. He represents taxpayers in IRS collections, audits, and appeals, and before the United States Tax Court. He has offices in Santa Cruz and San Jose, California. He's also been licensed to practice before the United States Tax Court since 1978. Bill graduated from Santa Clara University in 1962. After his service in the Army, United States Army, he worked at the Internal Revenue Service from 1966 through 1971 and has worked in public accounting from 1971 to the present. In his other life, Bill also plays some baseball. Is that right?
That's true. Amateur baseball is a big thing in my life.
That's great. So, and you play in, like, there's a Monterey League or something?
Yeah,
like
the Monterey Fall League is just getting underway, and it's a great place to play baseball this time of the year because the weather's beautiful in Monterey.
That's great. Well, congratulations for that.
Thank you.
Okay. Well, we've had other interviews with Bill. We've talked about IRS audits, and we've talked about IRS appeals, and now we're going to talk about another issue that's near and dear to many of our hearts, and that's I owe back taxes, now what? So when you conclude these other matters, you usually have a bill that's left to pay, and you may not have the cash to do it, and what have you. So we're going to talk a little bit about dealing with that. Now, as I get started with this with Bill, I just want to remind our viewers that this is a complex subject. We have continuing education courses that we talk about these issues for days. And so, and Bill's been doing this for many years, so he could talk your ear off on this for hours and hours. So we're just going to hit some highlights, and we hope that will make the beginning of a conversation that you're going to have with your own representative for IRS collections. All right, Bill. Gee, I don't have the money to pay my taxes. Does that mean I'm a bad person?
Well, not necessarily. Things happen to people where things go off the tracks on their lives. Maybe there's a large medical situation or a divorce, and those issues take front and center, and then when it comes time to file and pay taxes, there's a tax bill that can't be paid, and so people can be victim of circumstances. On the other hand, you can have somebody that just has ignored things, and they're probably less a victim, but nevertheless, I don't think the IRS concerns themselves too much one way or the other as long as it's a civil matter. What they're interested in is dealing with the satisfaction of the debt.
Right. So, I mean, there are situations where there are items, things that we pay for in our lives that may be necessary expenses, and they're just not tax deductible. And so we're in a situation, again, like you said, maybe we had to pay a big medical expense, or for a business, a big one is like travel and entertainment. Okay, so meals and entertainment are only 50% deductible, but the money still went out.
That's correct.
And now you don't have the money to pay the taxes. So anyway, so there are some situations that make it kind of difficult, and if possible, you need to sort of look ahead and plan for those things. All right. Do you deal with the same people at the Internal Revenue Service for collections as for tax audits?
No, the collection people are in a separate body. They're the collection division, and the people that are the people with whom you speak are known as revenue officers, and they are the ones that deal with you on trying to resolve the issue of satisfying the debt.
Right. So these people aren't the ones where you're arguing about issues of tax law. It's just a matter of, okay, how are you going to empty those pockets to get the money?
That's correct. Yeah.
Okay. Why don't you explain a little bit about how the collection process works?
Well, generally you'll get a notice from the IRS that you have taxes due, and that's strictly correspondence, and you in turn can correspond back. And I would recommend that anytime you get a notice like that, you shouldn't just let it sit over in a corner. Is deal with it promptly. And if you have circumstances that call for special concerns, such as you did have large medical bills and all of a sudden you're short of cash, you can put that in a response, and then it goes back to the IRS, and maybe at that point the service could possibly assign it to a revenue officer and get it out of the correspondence issues, and then you meet with a revenue officer and deal with the issue of whether you can make installment payments or some other method of satisfying the debt.
Okay. So what do you think the key is for avoiding a horror story related to your collection situation?
Well, prompt response is the single biggest thing, and not ignoring a notice that comes from the service, even when you've responded, and maybe another notice comes down and you feel, oh well, I've already taken care of that. You should respond to every single notice that comes, and not ignore any one document that the IRS sends you.
Right. So, and I guess in addition to that, I would just say communication.
Right. That's really big.
So, so there needs to be a real conversation that's going up, and an indication to the IRS that you're being open and honest with them, and
that you're trying to comply.
Yeah, yes. Yeah. Right. What are the consequences of a late tax payment?
Well, interest and penalties generally will apply, and that's about it. As long as you're being cooperative and trying to resolve the thing in a good effort, that's about the limits that will come about.
Yeah. So I often have people come to me and say, "Are they going to throw me in jail?"
Well, we don't have debtor's prison any longer, so no, I don't think you have to deal with that as long as it's a civil matter.
Okay. What are some alternatives to full payment of the tax?
Well, you can arrange an installment payment with the service if that's in order, or if you have a huge liability and there's just no way in the world it looks like it's ever going to get paid, you can file what is called an offer in compromise. And that's where you contract with the government to settle a debt for much less than the actual debt.
Okay. So what about bankruptcy? Are there some federal tax liabilities that can actually be handled with bankruptcy?
Yeah, bankruptcy will eliminate taxes providing the tax years involved are more than 3 years old from the time of filing the bankruptcy, and that the returns involved have actually been filed at least 2 years before the filing of bankruptcy, and that the IRS has assessed those items 240 days prior to the filing of bankruptcy. So income taxes, there are circumstances where they can be forgiven in bankruptcy. Payroll taxes aren't eligible for forgiveness in bankruptcy.
Now, there are different types of payroll taxes. So there are some that we call the trust fund taxes.
Right, those are the ones that
can't be forgiven.
Yeah.
Those are the ones that basically the employer has withheld those from the employee's paycheck, and so the employer is acting as the agent for the government and collecting that money and remitting it, and so so those cannot be canceled in bankruptcy.
That's correct.
The other employer taxes, there's more of a possibility there. Now, okay. So, how do you get an installment agreement?
Well, usually that's meeting with the revenue officer and working something out. I've been involved in cases where the revenue officers have some latitude in that, although the arrangement that they will ask the client for financial information, and there's a form that they can file for those purposes when you're going for installment purposes, and it's a 433A that lists almost everything that the taxpayer owns and what their income is and what their personal expenses are, and from that the revenue officer will conclude to some payment amount that generally is going to satisfy the tax debt, and more often than not it's still going to be uncomfortable for the taxpayer in meeting that. So but nevertheless, that's one of the avenues. Another way to get an issue resolved is if a friend or a relative can just loan you the money to fulfill the debt, and then you can become obligated to your friend or relative to maybe in a more favorable repayment schedule, take care of it that way.
Okay. What is the statute of limitations for unpaid tax liabilities, income taxes?
Well, the IRS has a 10-year collection statute, so that and they're pretty savvy as to when that's going to expire. But and in the old times, years ago, it used to be that they would require taxpayers to sign an extension beyond that. And that doesn't exist anymore. So after 10 years, you're dropped off the rolls, and that's it.
So I remember now something in particular that I wanted to highlight, and that is it's really important to file your tax returns.
Oh, correct. And also when you have a case, it's not a bad idea for a taxpayer or the taxpayer's representative to request a copy of the taxpayer's transcript of account that the service has, so that you can see when things were assessed and what are the dates that that come to the 10-year issue.
Yeah. So you have to watch, there are these critical dates, like we said, the assessment date, and the assessment date isn't necessarily when you filed your income tax return.
No, that's correct. Yeah.
So you need to find out when the assessment date really was in order to get this running. But the time doesn't start running until you file an income tax return.
That's the big thing.
So if you don't, you can go 20 or 30 years. and
then the statute starts running once you file.
Yeah.
So there you go.
Yeah.
Yeah.
Okay. Well, let's talk a little bit about offers in compromise. So this is really a development area. Today is July 7th or
August
7th.
August 7th. There
oh
we
my
go.
God.
Time flies.
It's my anniversary.
There you go. Yeah.
So anyway, August 7th
Yeah.
today. No wonder
Yeah.
I'm a little spacey.
Yeah.
And so August 7th, 2012. And there have been some developments related to offers in compromise. So why don't you explain a little bit about what an offer in compromise is and what's going on in this area?
Okay, well, an offer in compromise is when you enter into a contract with the government to settle your tax liability for an amount lesser than the full tax liability. And for example, if a taxpayer owed $400,000 in taxes and back taxes, and you fill out the forms that the IRS requires, which is a Form 656 offer and compromise form, and now a form called 433A OIC. And the financial information on the 433A OIC will help you compute to an amount that the service will accept as an offer that can settle the case. For example, if you owe $400,000 and your computations come up to $200,000 on the IRS format, then your case can possibly be settled for $200,000, and the other $200,000 that is unpaid is forgiven by the IRS. But there are conditions, and there are all kinds of requirements and that you have to fulfill. And one of those requirements is that after an offer has been accepted, you have to stay on the beam with the IRS and filing and paying for the next 5 years. And the offer and compromise area has been greatly relaxed recently. The IRS came out in March and said that they were going to provide a more favorable circumstance in getting these things resolved. So getting back to my example, if someone owed $400,000 and your computation to the offer came out to be $200,000 under the old regime, that's what the amount was. But now with the new computations that the IRS is allowing, it's possible that you can settle your case for 1/4 of the amount that used to exist. So that $400,000 amount that could be settled for $200,000 now could be settled for $50,000. So it's a more generous approach, and this is just very recent. The forms for the IRS on this new approach came out in I guess it's May of this year, and so I was surprised when I read them to see how generous the service is in some of the things that they're permitting. Even in the asset section, they've always permitted you to reduced the value of a personal residence to what they call a quick sale value. But now your individual IRA account that you may have is only considered to the extent of 70% as being an asset of yours. And their income approach that they used to employ said that once you got to your net income on your living expenses minus your revenue minus your living expenses, that you multiply that by a factor of 48. Now you can, by paying within 5 months, you can do it on a factor of 12. And if you're going to pay more than 5 months, then the factor is 24. So in both instances, you're going to be paying an offer amount that's much less than what the old offer amounts required.
So one of the things that comes to my mind is, let's say that you had tried to do an offer and compromise before and you weren't successful. I mean, now you could actually go back.
Right, take another bite of the apple and maybe it will work. The other thing that you have to keep in mind is when you file an offer, one of the things the service requires is that you have to pay in at the time of submitting the offer 20% of the offer amount and an application fee of $150 in 2 separate checks. And if you withdraw or the offer is rejected, the IRS keeps the funds. So,
yeah.
So that's the somewhat of a gamble that you're dealing with. But on the other hand, all the computations are right in front of you. And getting back to the offer form itself, the offer and compromise form now is requiring something that's new, and that is to list the name of the party that's going to provide the funds to satisfy the offer. In the past, when you met with the offer and compromise representative, that was one of the questions they would ask you during the meeting. How are you going to satisfy this, because you don't have the wherewithal to do it? And generally the person or couple that's seeking the offer would say, you know, John Jones or my cousin or somebody of that nature. Now they want the person's name on the form 656, and that's one of the things that's new in this process, but it doesn't obligate that person. In other words, that person isn't under any special scrutiny or requirement by the service to follow through on that. And I've had cases where you've gone all the way through the offer, and during the course of events, maybe that person has experienced his own difficulties, or there's been a falling out in the relationship between the offer people and the lender, and all of a sudden you come up short.
Ouch.
Yeah.
Okay. So, I mean, this is really important, folks. There's a few things. I think one of the reasons that this has been relaxed is because of the economy. There's so many people that are suffering financial difficulties, so this is a way, basically, of Uncle Sam helping out a little bit. There has been a time where getting a successful offer was like getting hen's teeth. I mean, they were extremely rare.
That's true. It's gone in phases. During the early 2000s, when the qualified stock options were rampant and everybody was in the alternative minimum tax that they found out later they could not pay, it seemed like offers and compromise were almost in vogue, and that was the thing to get done. And there was favorable treatment. Then it sort of got a little more rigid, and the service got a little more strict on their requirements. And the service center that was involved mostly in those days was the Memphis Service Center, where the offers were filed. And you could send in a whole package that might be 6 inches thick, and if there was one I that wasn't dotted or a T that was crossed, that whole package would come back to you. And I often wonder, why don't you just phone me for something that might be an innocent item that could be taken care of telephonically, but that was the procedure. Now, people in California and certain other Western states will file their offers with the Holtzville, New York office. So I don't know if that changes the attitudes or anything, but the Memphis office does a certain part of the United States, and we in the West now file with it's called the Brookhaven campus in Holtzville, New York.
Okay. All right, so let's move on from offers and compromise. What do you do when an IRS agent shows up at your door and says, I'm a revenue officer here to collect the tax you owe the IRS?
Well, probably you want to get representation right away and say, and notify. I haven't heard of that circumstance occurring. I've heard of revenue officers after a case is underway showing up at someone's door, but not out of the blue. In other words, you will have notices, and possibly if you haven't paid attention to the notices, you may have someone coming up and calling you and meeting you face to face. But even in that instance, I think your best advice is I'm going to contact my attorney or CPA, and I will execute a power of attorney for him to represent me, and we'll go forward that way.
Okay. Maybe you can talk a little bit about IRS liens for a minute. So how does the IRS use them in this collection process?
Well, once you owe, a lien arises, and it's a general lien. But as things go along, if you have personal residence, there'll be a lien recorded on your residence, and that can cause all kinds of difficulties in trying to satisfy the debt if it requires a sale of some property where there's a lien. You have to bring the IRS into the picture to get approval that they're looking at this thing. Says, yeah, we'll let this property be sold to some other party, and our lien is going to be satisfied through the closing and escrow, and that's one thing that can happen. On the other thing, the IRS sometimes, if after you have a situation that's just in a stalemate, nothing's happening, they can issue what is called notice of intent to levy. And once that comes out, now you've got some very immediate action to take, because they are going to extract funds from your bank account. And even the state of California, I read recently, where if you have a bank account with the Bank of America, the state of California, for example, not only deals with your Bank of America account in California, if you have some Bank of America in another state, they can have access to those funds as well. So usually that's the thing that prompts immediate attention all the way around. And when those things come out, that's generally when I will get contacted by the taxpayer or the taxpayer's representative. What do we do now? And the answer to that is that after you analyze all the picture and get all the financial circumstances taken care of, you can file what is called a collection due process situation, and sometimes that will help get the matter resolved in a more I guess easier way of doing it than just dealing with somebody just taking funds from your bank account. Now, collection due process is a special circumstance where maybe the amount that is owed has some issues to it that aren't clear, and maybe the underlying reason for it is it was an incorrect tax determination. And so those matters can be resolved through collection due process, and they are handled again by the appeals office of the Internal Revenue Service. So when one of those are filed, you'll get a contact maybe in a few months from an appeals officer saying, I've got your case for collection due process, let's meet and see what merit it has, and we'll go forward from there.
Yeah. There's another thing that we didn't talk about related to offer and compromise, and that is that sometimes the statute of limitations might be closed as far as filing an amended return, but you may have an item that's really in dispute related to that tax return. You can actually file as under a doubt as to liability and possibly get an adjustment in that way. Isn't that right?
That's correct. On offers and compromise, you can file as doubt as to collectability and doubt as to liability. One of the curious things in this new regime that the IRS has created, they put right on the doubt as to liability, and that's the form is 656L. And I wonder about this because suppose you have doubt as to liability, and the whole liability that was determined is incorrect, and it should be zero. It's very explicit on their instructions saying doubt as to liability cannot be resolved for a zero amount. So I would assume that you would put down $1, but on the other hand, when you're doubt as to liability, you don't have to make any prepayments. For example, you don't have to make a 20% amount on an offer, nor do you pay an application fee. So it's a little more of still talking to the legal issues that were involved in it. I just find it curious that zero is not the answer, even though that may be the answer. They won't accept that.
Yeah, we'll put 10 or $100 or something in.
Right. That's just a little surprising, but I mean, it's certainly not an impediment. Just something that you have to deal with.
Okay. Well, we're getting down to the end here, Bill. Maybe you have some final thoughts that you'd like to throw out related to IRS collections.
Pretty much the same things that I've said in audit and everything else in dealing with the IRS is respond. Don't ignore notices, and even when you file an offer in compromise, that's supposed to put everything into suspense as far as once it's accepted by the service for consideration, that there will be no collection activity. And sometimes the left hand doesn't know what the right hand is doing, and the IRS will have another bill coming out and saying we're going to levy your bank account. And I've had that experience, and I told the client, hey, this stops everything. What I didn't say at the time was, hey, any notice you get, let me know.
Yeah.
And he thought Bill Mitchell was taking care of the whole thing, which I was, but still, and the service restored him once that was found out. But the idea is, don't ignore those things. You get a notice like that, say, hey, this matter is under offer and compromise. Please contact my representative.
Right. Okay, folks. Well, I hope that you found our discussion to be interesting and informative here. Give you things to think about and to be aware of. But you do have avenues when you are dealing with IRS collections. The most important thing, I guess, in general, that I'd say, in the sense that Bill said here, is, of course, first to be alert and to respond, and the other is just to communicate. And so, you know, it's very helpful to just get an IRS person on the line and say, yes, I am giving attention to this. And then as long as they know that you're doing that, then it's less likely they're going to take an extreme action like a levy on account.
That's correct.
So with that, we'll see you next time on Financial Insider Weekly.